Hi everyone, Stuart here again. Hope you can hear me loud and clear and see my ugly mug. It's Fed night or Fed day. It's 2 o'clock in New York, or it's 1:45 in the afternoon in New York. It's 5:45 here in not in sunny London. Actually, it's been a nice day, sunny day today. Wherever you are in the world, good evening, good morning, good afternoon. Welcome to you all. I hope you're well. Hope your train's been going good. Bit of a non-announcement, but there's so much going on for those poor guys and girls that sit on the the Federal Open Market Committee, the FOMC, with their latest announcement. No rate change today, but it's really what the dot plots look. Remember, the dot plots are how the individual members of the Fed, there's voting members and there's non-voting members, they all come together. So the voting members, obviously, are the guys and girls that are in charge of deciding whether they're increasing rates or decreasing rates. Obviously, the vice chairs, deputy chairs have a bigger sway, and obviously Mr. Powell has the final sway on everything. However, it is a democratic setup, but Chair Powell is the chair for good reason. And so no changes expected, very much nailed on this meeting. The question is, are they going to, be brave enough to start cutting rates later on in the year? June, July looks like the window as we get towards the end of the first half of the year. But we'll see how it all pans out. See how this sort of trade tariff craziness, if you ask me, for my opinion, not that it's worth anything, from the Trump presidency plays out, how these ongoing geopolitical tensions in the world are playing out. Interestingly, he's ramped up today of all days. He's ramped up pressure on Iran again today. There's something about they've got a month to get back to him about the nuclear proposals put on the table. Obviously, the ongoing situation, Ukraine and Russia. Zelensky spoke with Trump today, apparently following Putin's successful call with his friend in Washington yesterday, where he had obviously Trump took a 30-day ceasefire to him, and Putin said no. Basically, he's apparently said he'll stop bombing energy infrastructure, but there was 140 odd drones sent from Russia into Ukraine just today. So there we go. Obviously, read into that what you will. Actions speak louder than words, and Putin's in no position or in no mind clearly to put any compromise on the table. But anyway, politics. I'll keep that to one side for now. As far as the market's concerned, we are here with the gold chart. We are still moving up. Obviously, markets still feel that the uncertainty warrants this all-time high. Another one this morning. We went to $3,045 for an ounce of gold this morning. We are currently at 30.32 at the moment. Our stop loss, as we said yesterday, was pulled up to just for quizzical terms more than anything, $3,017 and $4,400 above where we got in at down here at 2,917 on the 4th of March, and we've just been following that trend all the way up, adding to our position and adding on these big 4-hour candles here, small increments as the trend was going with us. And dragging our stop loss up behind us to lock in profits, having taken early day profits down here somewhere, wasn't it, initially? But anyway, the overnight charges are negligible compared to the profit we're making on this one. So a big move here for gold. As I say, we've been long since the 4th of March. Those of you regular will be well aware of that. But anyway, that's buy and buy. So that's gold, suggesting markets remain concerned about these geopolitical tensions. Obviously, the situation in Gaza continues to be horrific. 400 plus people killed yesterday, according to Hamas, obviously. But even so, they're not going to exaggerate that much, are they? So that continues to worry, obviously spook markets. And as I say, the situation against the Iranians has been cranked up. Remember, the US hit the Houthis in Yemen as well. So, yeah. Anyway, let's get back to the markets. And the case in point tonight is the. Let's have a quick look. Well, show you on Forex Factory calendar here. This is tomorrow. We'll come to tomorrow later on. So no change in the federal funds rate. This rate that this range they have, the 400, the 425 or the 4.25% to 4.5% range. That's not going to change in 8 minutes time, as you can see when it comes up. The projections are going to be key. The statement again, how they talk about growth, how they talk about inflation, unemployment, obviously, and very much on the cards. We've seen some cracks in the jobs market, very key. But really, the projections will suggest where we perhaps might be going from here. And then in half an hour, I'm not going to sure if I'm going to be around for the press conference. I might stop the broadcast and come back later, but I'm not sure how the technical things are going to work if I do that. But really, the press conference could be key as well. We could see some volatility in there. Powell is quite adept at dealing and speaking to the press. He's very straight forward. He's quite doesn't really get in a fluster. He gets across what he wants to get across, a bit like Mr. Lagarde over in Europe. However, he might get pushed again. He's been very good at not getting dragged into the political shenanigans, but they can't obviously ignore the impact of the tariffs, the potential inflationary impact of the tariffs, the potential impact on their treasury purchases. The yields on the US treasuries continue to swirl as well. So remember, they've got their two-pronged remit. The Fed, they've got the stable prices, i.e., inflation, CPI, PCI, CPI, sorry. Down at 2%. That's the target. It's getting there. It just won't stay there. It's looking a bit sticky. And is it going to start to move up because of that sort of friction on trade with the tariffs coming in? The other one is obviously full employment. Employment, jobs have been remarkably strong. Is that unemployment rate going to start to tick up to the 4 and a bit percent, 4.6, 4.8%, something like that? That's starting to get a bit twitchy, the interest rates. It's not necessarily. It's in there sort of remit, but the two main things are obviously prices and jobs, but stable interest rates as well. So are we heading lower this year at all, or are we going to stay in this 425, 450 range? Again, most people, most markets analysts and pundits are talking about at least still another rate cut, if not two rate cuts, possibly bring it down to 4% by the end of the year. But it may be a stretch too far if the impact of the trade war continues. And remember, 2018, 2019, last time there was a big hit, particularly on stocks in December. I remember quite distinctly this December 2018. It was a bit of an outlier because December's is normally quite strong for stock markets, and it actually fell quite significantly during December 2018 on the back of the tariffs. And the tariffs this time are bigger and bolder and more wide range. We've already got the 25% on aluminium and steel imports. We got the 2nd of April when the reciprocal tariffs are coming in on everybody they deal with. Obviously, the focus has been Mexico and Canada, their two nearest neighbours. But then, it brings in all the reciprocal deals coming in on the 2nd of April as well, and much more extensive. So again, see how it all pans out. Obviously, the impact on growth has been quite significant. Wall Street's really been falling over itself about sort of reducing expectations with regard to growth for 2025 and 2026 because of the tariffs. There's not many outliers within that noise at the moment, but again, we'll see what sort of peace dividend there is, if indeed there is a lasting peace in Ukraine. It's looking like they're obviously going to have to give up some land, which is what they didn't want to do. Is it a peace deal? Can the ceasefire become a peace deal? But lots of pundits are also saying, if it falls the way it's looking like it's falling, Trump speaking to Putin, it might empower other autocrats around the world to press the buttons. And I noticed today in Turkey, Erdogan was he's arrested. Is he arrested? Don't quote me on that. But there was the mayor of Istanbul has always been a big critic of Erdogan in Turkey, and some other outspoken critic has been sort of questioned as well today. So obviously the bigger issue, it remains Taiwan and China. Obviously there's North Korea in the mix as well. Obviously Iran also in the mix. And obviously the situation with Taiwan is that these high-powered chips that's driving the AI boom, it's been driving stock markets and driving sentiment, and 80-95% of it is all I think it's some ridiculous number, like 96% is produced in that one small island in Taiwan. I think it might have come down a wee bit since then, but certainly around the 80% mark. Area where it's actually manufactured there. Obviously, all the brains of it is done in different parts of the world, the design and what have you. I was watching just before 3 minutes before the announcement. I was watching for a little while at least. Jack, the NVIDIA CEO, the keynote speech yesterday. Not Jack. What's he called? Jack Jensen. No, not Jack. I call him Jensen. Through talking to his programmers and his engineers and his geeks, and it was very much it wasn't got nothing to do with the performance of the NVIDIA stock or anything like that, but people were watching it because obviously they've bought stock or they've invested in NVIDIA or trading NVIDIA, given it's one of the biggest companies in the world all of a sudden. But it was very much tech speak. It was quite interesting watching an engineer talk to engineers. It was very geeky yesterday, and it went on for about an hour and a half. I think he was talking for the GTC, his keynote speech yesterday was talking about the Vera Rubin chip, the NVL 144. I've written it down here in my notes here. But, anyway, all of that sits in the background, and the poor old Fed, Mr. Powell and the guys and the ladies at the Fed have got to deal with that. Plot the course for US growth. I mean, it was doing all right. So see what these projections look like in a few minutes. This is what the key thing. So I'll try and summarize the statement as it comes out and put my spin on it. I'll put not my spin on what I, again, for what it's worth, on there. So we'll see again in a few minutes what that looks like. So let's have a quick look at the markets. We've had a look at gold. Gold's come down a bit, so we're at 430.30 for gold. The euro dollar is at 108.70. Again, this is the hourly chart. It's been moving down all day. So the dollar's sort of got a bit of a lift going into this announcement today. So the euro's been going down today. Dollar yen conversely been going up through the key 150 area. It's a big psychological area. So dollars bid today. Dollar CAD also rising 144.50, and sterling 129.60. We were over 130 yesterday. Into around about close yesterday, and we've been weaker all day. So again, as I say, see what the rate statement says. Obviously, the rate decision is out. The rates held unchanged as expected. No particular announcement on that. Was 99% priced in, as we said. So there's no particular move on that. So the here, just looking at sterling. It's ticked up a little bit initially on the announcement, but again, as we said yesterday, some of these are, some of the players, some of the market makers, some of the big banks, use these big major announcements to, get positions on or get positions off, and therefore move the market unjustifiably on the data. Yesterday, was it yesterday or the day before, where we had that strange moving that we'd had some quite weak data. It was the retail and housing data, wasn't it? And we had that very odd move yesterday. But again, that's that could again been an example of that happening. But the noise will come out eventually, undoubtedly. Yeah, so difficult one to trade, obviously, given that this was all priced in. So we've had a weakness here on the euro dollar, which is using this as an example. And this, I can't, again, it looks quite a significant move there, but we've gone from 129.58 to 129.75. So we've moved down. I mean, it's 20 pip move in that. That's quite a leap up. So there must be something that somebody's not particularly happy with. Right, the statement, I've got it here now in front of me. So let me just have a quick look. Try and summarize this for you guys. As ever, if it's something you want to trade or something you're interested in on this particular evening, let me know. Oh, sorry, I've got it's far too much of me. There we are. Let me know. We'll have a look at it. But as you can see on the euro, 129.70 or 129.80. We're going back to the high of the day. Interestingly, here it's not the high of the day. You fool. That was this 5, because this is the 5-minute chart. This is the high of the day. This is sorry, this is cable. It's not euro. It's sterling. It's just good as an example of any of a stronger dollar into the announcement, and the announcement's come out, and it's given up at least half of the gains of today that dollars had. So dollars turned again. So let me just try and summarize what I'm seeing here in the statement for you. See if there's some highlights that I could bring out. Recently, against the economic activities continue to expand at a solid pace. We used that last time in January, earlier in the year. Unemployment rate stabilized at a low level in recent months, and labour market conditions remain solid. Inflation remains somewhat elevated. Again, they've used that phrase, somewhat elevated. They used that last time, somewhat elevated. Is this the right announcement? Yeah, no, it's right. I thought it was January. I was looking at. This committee seeks to achieve maximum employment and inflation. That's their, that is their remit at the rate of 2% over the longer term. Uncertainty around the economic outlook has increased. So there we go. That was also said in January, but uncertainty around the economic outlook has increased. Obviously, now Trump's in place. In particular, the policies are in place. The committee is attentive to the risks to both sides of its dual mandate. In support of its goals, the committee decided to maintain the target rate at 2.25 to 2.5. In considering the extent, the timing of the adjustments and target range of federal carefully incoming data. So we talk about incoming data, outlook, balance of risk. The committee will continue reducing its holdings of treasury securities. Nothing new there that's moved any. Beginning in April, the committee will slow the pace of decline of its securities holdings by reducing the monthly redemption on cap on treasuries from 25 billion to 5 billion. That's quite a significant change. It was sort of expected. So there's nothing. That's not a shock. It's a big rundown, but that was priced in as well. The committee will maintain the monthly redemption cap on agency debt and agency mortgage-backed securities. That's MBSs, as you say, mortgage-backed securities at 35 billion. The committee is strongly committed to supporting maximum employment and returning inflation to its 2% objective. So back to its twin mandate again. In assessing the appropriate stance of monetary policy, the committee will continue to monitor the implication of incoming information on the economic outlook. The committee will be prepared to adjust the stance of monetary policy as appropriate. Now, again, the risks emerge that could impede the attainment of the goals. The committee's assessment will take into account a wide range of information, including readings on labour market conditions, inflation pressures, inflation expectations, and financial and here at the end, and financial and international development. That's its only comment on geopolitics. Voting for the monetary policy was everybody, basically. Voting against this action was Christopher Waller, who supported no change for the federal funds target rate, but preferred to continue the current pace of decline in security holding. So Waller is the one that's not wanted to keep the redemption back at 25 billion to the 5 billion. So Waller's the only outlier on that. That might have that's a bit of a surprise, to be honest. But everybody else was in unison with that. Like I said, their individual dot plots will be quite interesting. So Waller's view will be quite interesting. And again, the minute that come out in a couple of weeks, they'll be fascinating, given that things were going quite smoothly, but for the Fed relatively, but the incoming Trump administration has turned that right on top, flipped completely. So the gains that the dollar's seen today are still in play. As we've seen here, just using sterling as an example. So the brief spike to 130 yesterday couldn't hold. So if this is our sort of daily range, we just put our fib level on the range of the day, which is sort of around about this sort of level. We are, sorry, there we are. Just for the day, just using this as an example, the reaction. I'm using this as an example to the reaction of the news. So this is our key retracement level. So if the dollar's going to come back against sterling, it needs to recoup certainly the 61.8, this key golden ratio area at 129.88. Sorry, sterling's going to maintain its rally against the dollar that we've seen here. It needs to get back over that level, and certainly first resistance is that 129.81 to the upside. Sterling's going to come back in to shade. If you just flip this up to the daily time frame, you see the dollar's been under pressure and continues to be under pressure. Sterling, in particular, is accrued, and so this hiccup here on this daily time frame, that's all it is. So there's nothing new in there. So the market's expectation of a weaker dollar continues to play out here through February and March. Here, and you can see this quite clearly here. And same with the euro. We do the same thing with the euro on the daily time frame. We've had a very big run. Obviously, the situation in Germany has exacerbated this move higher. But from 104 back here at the beginning of March, we're all the way here over 109. Although we're obviously come back down against that today, so we still remain bid. So those two major European currencies, the sterling and the euro, remain bid against a weaker dollar. Down, it's less positive for the commodity currencies. So the Aussie dollar is up, but you can see it's a much more choppy rally. Canadian dollar obviously is impacted. They're cancelling each other out, so we're still in this congestion zone for the Canadian dollar. Kiwi's been quite weak, and a similar pattern to the Aussie. I don't know what's happened with our chart there, but you get my point. The dollar's weakened across its peers, but some are more weaker than others, if we like. Okay, and finally the Swissy. Similar sort of move here, strong move like the euro and sterling to an extent, and that short. I think we got short on this yesterday, didn't we? Was it yesterday or the day before? I can't remember. But yeah, we're actually out the money on that. But it's bounced back a wee bit. But yeah, that trend continues to be in place. So the weaker dollar during February and March has continued. There's nothing really in that statement that I've just summarised there for you. The only surprise was Christopher Waller wanting to keep the where was it? The monetary redemption account with Treasury securities at 25 billion. Everyone else has agreed this decline to 5 billion. So again, nothing particularly exciting in there, to be honest. They do manage to keep things size, but this running off of the balance sheet was a little bit of a surprise. But it's really, as you can see here, let's go back to the euro on the 5 minute. See the reaction to the actual news, which is what we're talking about 10 minutes in. It's somewhat negligible, but we've gone from 108 70 to 108.90, so it's a 20 pip move on the Fed move. Yields topped at for 10-year is the key one. It was at 10.31 before I came in, 10.31 something, 10.31.20 I think, or 10.30, nearly 10.32 ahead of the rate cap. And let me just see, it's at sorry, not 10, what am I talking about? 431.20 is where it was, and we're at 4 4.29. So it has come. So yield, the yield has come down. Treasury have ticked up a wee bit, and the dollar's given up some of its early morning gains in New York, early afternoon or late afternoon gains here in London. So euro, are we going to see a recovery back to 109? But as I've just shown you on the daily time frame, I hope you saw that on the daily time frame, the trend remains obviously set. There's nothing in that, and again, because there's no surprises in that data so far. Again, so now clearly the dot plots perhaps haven't changed. Let me just see if I can see the projections. Hang on a sec. So perhaps they've not seen a dot plot and estimates for GDP, unemployment, and inflation, and run on inflation. So 25, 3.9% is the dot plot from December. Showed up December. Articles. That was December, March 25 dot plot. So 3.9% is the 3.9% is the 2025 average. Where we got. I'm just literally counting the dots here from the screen. Catch 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 of them around the 3.9%. So that's the summation. So we are coming down. Next year, 2026, 3.4%, and 2027, 3.1. So again, we've moved down. So we are still looking to look at the Fed, so unchanged for 2020, end of 2029 at 3.9%. So nothing's changed for this year. So there may be slowing of that data going forward. The midpoint. So in December, the median bump was 2% for this year. The projection is now 1.7 for GDP, 1.7% for GDP in 2025. So the downgraded growth is expected. The PCE inflation, remember the PCE inflator, the one that comes out at the end of the month, the one that they're more interested in. They ticked that to 2.5% from 2.1% last time. Now it's from 2.5%, 2.8% by the end of 2023. So inflation's increased. Growth has decreased. These were very much as expected. Growth down, inflation up, and an unemployment rate still at 4.3%. They now see it at 4.4%. So just one tick higher, 4.3% for 2026. So it's very much in line with what was expected, with growth sort of ticked down, inflation ticked up. To this 2.8%. That's quite a lift from 2.5%. So that would have added to the move against the dollar. And I thought they might have gone a bit high with unemployment, but 4.3% to 4.4%. So it's only one tick there. So that's what they're coming out with for the new projections. So a lot of it's very much in line with expectations. The surprise might be the size of that cut in running off their book, their holding book. But so we're still looking by the end of 2025 of interest rates down at 3.9%. Remember, we're currently in the 4.25, 4.50 area. So that's looking like still 25 basis point cuts. When they come now, maybe the key thing. So if we just bring in, I'm not sure this would have uploaded, given this is a free runner, but we'll see what the CMC, the futures this freebie want there. So obviously that was today. Sorry, I'm talking about today. Today's happened. So the next one is March, and they're now saying there's nothing happening in March, which is not what we expected. Nothing happening. 80% chance of nothing happening in May. A 20% chance of a potential 25 basis. I think that's a bit ambitious. The main move is now still that June, July window where we let me just look at this, see how that's changed in the so 53 from 50. Yeah, so it's coming down a wee bit. So even the first move in June is still only 50-50. Still a 36.5% chance of nothing happening even in June. So and by then, certainly by April and May, we'll start seeing some impacts from the tariffs. It depends how long they go through, obviously. But certainly by June, July, if this reciprocal tariff issue starts to bite or it gets implemented, it's not just gets bite. Remember, he does a lot of talking, Mr. Trump, President Trump, and his colleagues. But what the actual outcome of it remains to be seen. So we'll see. So 10 minutes to the press conference and anything you might say. But generally, dollar has sort of slipped down from quite a steady gain today. If we just look at the euro here on the, just go up to the 15-minute chart, right, so we can see the day a wee bit better. So we see, here this is the this morning. Where we were at euro was at 109.15. We gave up 109 into the afternoon as the Americans traders were getting to their desks, and we've moved lower below yesterday's low here today at 108.60, and we've moved to 108.85, so 25 point move up on that. The Fed finally coming to fruition. And I said the only surprise was Waller's breaking ranks with not wanting to cut the book by from 25 billion to 5 billion. So we still got so it's really in line, really, although they've downgraded growth and increased their inflation expectations 2.8%. The fact that they're still looking to cut rates twice during 2025, again, it might be trying to plot that what's it called, Goldilocks type approach, that we can perhaps manage these tariffs. Nothing in there, that statement, as we said, directly related to the tariffs or the geopolitical uncertainty, other than that one line about international situation. So we're as we were, really. So we could see, so it's now really really in the next 10 minutes or so, the next half an hour or so, see how the markets react to that. So dollar has come back a bit. Stocks you would expect to have ticked a bit lower, but we'll have a look at our on the short term. Yes, so actually, so we were. This is actually, this is the Nasdaq, because the Nasdaq's been the most volatile. So again, one that was we were long. We went long this the other day on Monday, didn't we? It just got stopped out yesterday. Yeah, so it's had a better day today. We're up off the lows around about yesterday's lows as well this morning, and we've rallied, but we're down. And then since the Trump, as interestingly as the dollar's improved, stocks have ticked up as well, which is interesting. So the Nasdaq is up about 1% today. The S&P point not quite as much, 0.8 of 1%, and the Dow 0.8 of 1% as well. So again, the longer term trend hasn't turned, although there's some perhaps consolidation here, but we've had a very significant sell-off. The 20-day moving average here for the Nasdaq remains at 20,300, still a long way from where we trade at the moment at 19,700. So we're consolidating at relative lows, but this was a key area that we breached here. We talked about this last week, didn't we, and earlier this week, this key pivot area here, and the floor is still potentially down here, 18,700. The next low here takes us back to the summer of last year at 17,800. So there's still pressure and again, it's that chart there. You can see, you know, how markets go up nice and slowly, but they sell off quite aggressively. And the steepness of the decline, as the Americans would say, the defense has been breached, and the decline is the angle of the decline is much more significant than the angle of the incline. So there we are, consolidation, triple top, double top, and down we've come. We sold off. We're in contraction zone. We're under 10% from our high. What happens next? Well, at the moment, the trend is still to the downside. We'll, you know, see if we catch some retraces, but at the moment, we're still moving lower. But if we zoom this, you know, in, you know, we've sold off before. This is a bigger one than last time. Significant one here from the summer of last year. So, and obviously things have changed. We got a different president, but we got a squeeze on earnings potentially, and if the US consumer rolls over. Remember, the US economy so heavily predicated on the US consumer. He's still, I'm saying they are still, you know, fairly, you know, sticking their hands in their pockets. But sentiment from the consumer, as we saw last week, has quite significantly weakened. But at the moment, they're still doing. So we'll see when they stop doing, when they stop purchasing, we'll see what goes. So, low growth, higher inflation. The word stagflation starts getting kicked around, I'm sure. So let's see, but it's still the world's most robust economy, and it's had a fantastic run here. The stock market, as you can see here, but this is a significant decline. Some will be buying here, others will be waiting for the trend to turn. You know, here you see the RSI has been, you know, technically in its overbought area. It's peaked out with that 30 area. MACD, you know, still declining here. We've had a stick up. We haven't had a cross on the our MACD, our signal line and our MACD line yet. So we're still moving down. The histograms are getting closer. We're still light pink rather than deep pink. We're certainly not green. We haven't broken the zero line here. We haven't turned up. So the trend remains to the downside, although we have been sort of congesting. Friday was a good day. We dipped down yesterday, and so far we're up today at the moment, but we'll see. So I'm going to wrap this up actually, guys, because I'm running out of steam, and also I've got no comments. Nobody's asking about any particular assets to have a look at, but let me just quickly run through what else is going on. So in the crypto space, Bitcoin 84,300. So we've had a positive up day today, but again, the 20-day moving average remains elusive. It's now we're coming down to meet each other, 85,600 now, the 20-day moving average. The trend remains to the downside. I think I thought I'd driven a little trend line on this the other day. It hasn't kept it from these lows down here. So possibly, we'll see. But we had possibly here, didn't we? Steep one. But we'll see how that goes there. So we're still, you know, here, break of here. We could have another rally through back to the key, or what was the key support area, the 92,000 area, before we go up. But is this just an extended consolidation before we go back down to test 78 and 75? Yeah, we'll see. Not a lot going on. Sort of a bit of an indecision, but the longer that goes on, the breakout can be quite significant. So put some biggish candles on Bitcoin on this daily time frame. So let's have a look how that plays out going into the end of the week. Crypto energies, oil at 70, US oil back at 70. We'd had a relatively good rally on the floor, but again another one but significantly short of its 20-day moving average at $72. Obviously, peace in the Middle East, or balance in Russia and Ukraine will help that rally, but pressure on Iran and the saber rattling between Washington and Tehran to continue. Obviously, that spooks potential supplies through the Gulf. So we'll see. Obviously, counter to that is Russian oil coming back potentially. All sorts going on. So again, another one. The trend remains to the downside, although we are sort of consolidating down here. The breach of $70 and the test of 60 under 68 remains the downside to that one. But again, you see here on the fib from this big leg down here, the even the 38 is all the way up here, but the 50% is at 75.65, and the key Fibonacci 61.8 is at 77.35. So the weakness continues to the downside for oil. And that's UK oil, not US oil. Sorry, I'm talking about US Brent there. US oil, that's what I was talking about. So that's the key 67 area is being breached, and the low was 65.50, wasn't it? I thought that didn't look right. I was looking at Brent and not WTI, but there you can see the consolidation a bit more exaggerated there in the Brent market. Sorry, the WTI market, the US oil, but we are above what is now becoming the new pivot at $67 at 67.30 for a barrel of US oil. And there we go. Let's just go back to the euro. I'm going to wrap this up before I'm going to go and watch Mr. Powell. So we might see some more volatility if he gets caught on unguarded comments, or he talks he overemphasizes the declining growth, or he overemphasizes the increase in inflation. And remember, inflation now at 2.8% is what they're talking about. Growth downgraded to 1.8%. I think it was, wasn't it? Wasn't 1.8? Yes. And the dot plots to 3.9% for the end of 2025. So it's that inflation number we've talked about, always sticky, but now back to 2.8%, that key core CPI data. Right, Powell, I can see my other screen here is about to come out, or is due. I'm going to wrap this up, my friends, and go and listen to that. And I will see you tomorrow. Obviously, I mentioned the Bank of Japan. Bank of Japan were on the platform and on the podiums this morning. Nothing from there, no change there. We're expecting no change tomorrow from the Bank of England. We got the Swiss National Bank before that. The Swiss National Bank are expected to cut rates. Let me just bring in the calendar for you. For that for tomorrow. But I'll be live tomorrow at 1:45 midday, 1:45 noon here in London tomorrow. And let's got everybody on here. Let me go down Tuesday, Wednesday. There's Thursday, my friends. Let's bring that a wee bit bigger. Can you see that? I hope you can. There we are. So tomorrow, as we're waiting for Mr. Powell to come in, Vernal holiday in Japan. It's the 21st, March 20th, spring equinox. It's the 12 hours of daylight, 12 hours of darkness. So we're in balance, very much, very environmentally aware, the Japanese. Anyway, so plenty going on tomorrow, as we said earlier in the week. So jobs out of Australia. We got wages and jobs numbers out of the UK. We've got the Swiss National Bank with their 25 basis point interest rate decision cut, moving it lower again. And then we got the Bank of England at 12 o'clock. Again, see what the vote count split is like. We've had a bit of a surprise from the Fed today. No change from the Bank of England, but we key what both Andrew Bailey and his team say on that one. Weekly jobs out of the US as well, the Philly Fed as well tomorrow. So lots going on tomorrow. Existing home sales as well. Remember the home sales earlier in the week was a bit of a surprise because that spike in that dollar CAD move we were looking at as the data came out. And Governor Macklin's also got a speech tomorrow as well. So lots going on tomorrow, Thursday. So join me from 12 o'clock for the Bank of England announcement and anticipation of the, and we'll also be around for the US data at the bottom of the hour as well. Right, I'm off to watch Mr. Powell. He's actually chatting away, and we haven't really. It's just reading the statement. The economy is strong overall. So look at the. So look at this while we're here. There we are. He started talking, and the Euros held its rally, or it's hardly rally, it's 20-foot move on the back of this statement. So yeah, he'd be talking about, talking about the anticipation of the GDP down, growth down, inflation up, unemployment rising. So in a bit of a pin to move. So job to deal with. It'll be fascinating, I say, the minutes this month, given they are in the teeth of the turmoil of tariffs from Mr. Trump. And with that, I will leave you in peace. If you're not, if you haven't got an account with us, why not? Would be my question. Come and join us, my friends. It's you've got to, as with any trading approach, you've got to stick to some rules. The beauty of prop trading and the beauty of us at theproptrade.com is we set out very clearly what the requirements are, and if you can hit these targets, does that mean reduced? So it's been reduced 8% profit out of 5% there on the standard setup. That's been reduced to 8% from 10%. So 2 stages, 2-step challenge, 2-phase challenge is our most popular one here. $25,000, $25,000 account. So you've got lots of equity to play with. Remember, these are simulated accounts, but it's on live feeds from live liquidity providers, which is why we get these, these hiccups, these sort of movements when markets really do sort of play about or get played about with by the market makers. And it's $175. But if you've got a coupon code, and I give you one here tonight, so SC25 will get you 25% off that $175. So for less than $150, you can have you can have the ability to trade as a real trader with $25,000 account. And if you're, if you can follow the rules, if you can, even just following me on the Discord group, it stays within these rules. So, you want 5%, you want an 8% profit after 3 days minimum on your account. Lets you move to phase 2, as long as you're not losing more than 5% a day. You don't want to be doing that, and obviously a 10% loss, you don't want to be doing anything like that. So this is the thing to be concentrated on, guys. Keeping the losses small. Most strategies, most systems are successful. It's the application and the use of the trader himself or herself that blows things up. So concentrate on keeping the losses small, and the winning trades will take care of themselves, honestly. So phase 1, 8%. Phase 2 has only got 5%, and then you're into a funded account, so you can make some real significant money. Be successful with your funded account, and 80%, or starting with 80% of the profits, go to you. So whatever you make, 80% is yours. You get and you get a refund on your fees of actually opening up the challenge when you first started. So whether it was 175 or 160, whatever it is, 150. If you're using the SC code here, gets you that discount. You get that back once you get into a funded account, and then the world's your oyster. You can then scale up, dynamics and trade bigger accounts, and just keep following the rules. Keep following the rules. Make it boring, make it process driven. So that's where we are. Right, I'll just leave you. I'll just check my trading platform here, see what's going on for me tonight. Remember, over on Discord, guys, I put up every night what I'm doing. There we are, trading update on there. Here on trading strategies is where you want to be, guys. Trading strategies is where I put all the data of what's gone on. So there we are. I'm showing you this. Nasdaq got stopped out yesterday. It was a 330 point loss, a lot of pips, yes, but this is my screens. This is a screenshot from my scanner. So this is my account size I'm trading this. There's my so I changed the risk level. It's 2% risk on everything I do. So although I lost 300 pips, I that's just what happens. 300 pips, 300 points. It was only a 2%, maximum 2%, because that was what I was trading with per point. And these are sort of the targets and limits I'm looking for. But anyway, that's just how my system works. But and here we were, we had a big hit over last week. We were up 150 points on Wednesday. By the end of Friday, we were down 370 points. But we had that winning XRP trade, which meant we were positive for the week of 263. In point, now this is just points terms, so percentage terms, we were up a few percent as well, and we're up 372.45 for March as of the end of last week. And so far this week, we're actually had a few losing trades, haven't we, this week? Yeah, we had that. I closed that euro pound, and some of the open ones are actually out of pocket at the moment. But so that was a 9-point loss. And there was another losing one, wasn't there, to do? Oh yeah, there we are. The euro dollar stop loss was hit this morning. That's that should have been closed out earlier yesterday. It should have been closed out earlier yesterday. It should definitely have been closed last night. For some reason, it didn't close. Again, just a glitch. So I manually closing. It was a 43.6 point loss. So we're down so far this week. 50 points or 52 points or something. But anyway, that's where we are at the moment. We opened another long 0.5% risk, so 50% risk long on the US 30. So currently we've got actually, let's just do these. Let's quickly flick back to see what Mr. Trump is, Mr. Powell is saying hasn't changed the move. We just sort of re-emphasize it. So we've tested 109 and we're moving low. So overall, the dollar gain of the day is sort of, as half of it's been taken away, hasn't it? Gains of the dollar today on the announcement tonight. So if we just go through what is open, so we are short dollar CAD, I think. Sorry, let me just take this up to the hourly or the FORA. Yeah, we were trying to be short. That's out of the money as well. I think everything's out of the money at the moment. So dollar CAD's out of the money. It's trending away from us here on the 1 hour chart. Dollar Swiss is also out of the money. That's come back just now, but that's out of the money. We were indexes. We are long the S&P 500. We got within the Nasdaq got took out. We got within a few points of getting closed out on that one as well. Yesterday it hasn't. We've turned around. This is a gain today at the moment, so we're still out of the money on the Nasdaq. The Dow we just saw, we just got long on that one today. That was the small here. And I put that 12 o'clock. We got in. No, can't we? Because we got in here. It's been 1 o'clock. Anyway, we're in the money now. We're out of the money now. We're back in the money on the Nasdaq. The DAX is back in the money. We were out of the money a bit today. It's the Nasdaq. The DAX is still open, and the FTSE, the UK 100, is messing about, but we're just about in the money on that one as well. There's stop loss as a target. I said these are all on the Discord channel, guys. If you want to follow me, do that. If you don't, it's up to you. Obviously, I'm relatively happy with how things are going. I know what I'm doing, and I'm here to help you guys. Honestly, I don't need to do this. This is all free of charge. Nobody's asked me to do this. I've took this off my own bat. So anyway, pound Swiss is out of the money at the moment. That was our entry. We were in the money a bit initially, and now we're out of the money. We want to be moving down here. See how that one goes. Pound Swiss we've done. Dollar Swiss we've done. Dow we've done. And the other, obviously, are the creme de la creme I'm going to leave you with. Is our gold position, and we're back again. Look at this. Back again. The weakness of the dollar in following the Fed. Remember, all sorts of things driving the gold price, but new all-time highs again post-Fed as Powell speaks, 30.45. So I'm going to leave you with that news, my friends. Powell's press conference pushes gold to new all-time highs. There we go. It's the headline to grab you tomorrow, isn't it? Will be difficult to assess inflation impacts of tariffs, says Mr. Powell. He's obviously getting pulled into the tariff questions and how he's dealing with it currently. I need to go and listen to him, my friends. So take care, be good. I'll see you tomorrow for the Bank of England, Andrew Bailey and the gang. Stay safe, and may the pips be with you, my friends. Gold at all-time highs as Powell speaks. See you tomorrow. All the best. Cheers. Bye.